Welcome back. Well, the budget includes a host of tax credits aimed at spurring investment. Will that be enough to spur business to action? Dino Infante is national leader of KPMG's private enterprise tax practice. Dino, thanks for being with us.
Thank you for having me.
So there was a hope, I think, by the business community that we would see some kind of real tax reform. Let's start with your overall impression of what we got in this budget. We obviously got a lot on the tax front, but did we get kind of reform, anything kind of material?
Well, this budget comes at a time when Canada is facing significant economic challenges, Amanda, and certainly also while there's very challenging negotiations with our largest trading partner, all while CUSMA's sitting out in the wings. I would call this a true business budget, a budget that is encouraging investment in Canada, building up the Canadian economy, and the ability to for businesses, private enterprises, domestic investors in Canada, foreign investors, to invest their capital here in Canada and keep it here in Canada, in this great country of ours. And in that respect, government's delivering on some very big, important investments in infrastructure and spending to ultimately help build long-term value. And in respect of some of the comments you're making is spending. There's been some significant spending cuts, but also some personal and corporate tax measures. And the way I would sum it up, if I was to put it into one word and borrow that word that was used in our firm's webcast yesterday, federal budget webcast that Bill Morneau and Goldie Hyder spoke to, is execution. And execution's key. Dealing with some of that low-hanging fruit to kind of get the flywheel moving and get some with our economy.
So on that front, there are an extension of existing tax credits. Were you happy with what you saw? Do you think it will go towards improving our productivity, which is how the government is framing it?
Right. So from a corporate perspective, there are two primary measures that came into play from a corporate tax perspective. One, the immediate expensing of manufacturing and processing equipment, which is quite a significant measure that'll apply to manufacturing and processing businesses. And the second measure was the scientific research and experimental development measure, which essentially expands the expenditure limit and encourage Canadian businesses to conduct SR&ED activities and create, intellectual property here in Canada. So I think those two measures are welcome changes.
And I guess the question that we don't have the answer to yet, Dino, is whether businesses are likely to take up the opportunity here. Is it your impression that they're primed for that? Business investment has fallen off a cliff in recent years.
It certainly has. And as you said, productivity is key here. So really, and as I said earlier, execution. So what the hope is here is that ultimately businesses are engaged and, are investing here in Canada to stimulate the economy. Ultimately, let's find those quick hits and as I said, get the flywheel going. So ultimately, it's long-term, productivity and growth is being met.
Dino, so good to have you. Appreciate your time today.
Thank you very much.
Dino Infante is national leader of KPMG's private enterprise tax practice. Well, will the incentives in this federal budget for businesses make a meaningful difference in how they behave? Martha Breithout is a partner in credit and incentives at BDO. Martha, thanks for being with us.
Thanks for having me, Amanda. Very excited today.
And I wanted to check with you, actually, first about whether businesses had already taken up the government on these kinds of incentives. Some of these have been in place for about a year and a half, and I was curious to know what you've seen in the market. Are these accelerated depreciations, these tax credits, and some of them are big, right, 100%. Has it spurred business to act recently?
So I'm finding in the market, it's actually education first. So with a lot of these programs, companies have to understand what's available and then make that business decision to actually implement these technologies. So there is a little bit of a delay, but now that the program, as you say, has been around for about a year and a half, we are seeing uptake. So since January of this year, we've been able to actually file claims. So it's still been a very short time frame, but in that, 10 months now that we're coming up to, we've seen tons of use cases. We've seen an uptick in companies actually asking, how can the government support me in what I'm doing in my business? So I think it is hoping to hit the target.
So that's good news for the government, which is hoping, as it says, that it's going to catalyze hundreds of millions, half a trillion dollars in investments. Would you say that the pieces are in place? When you looked at this budget, were you excited by what you saw on behalf of kind of the business community?
Yeah, that's a great question. So I think, and we've heard it in the previous discussion. So two of the things that I think businesses are looking for is number one, tax reform. So a little bit more around the requests that CRA is providing and making those streamlined and using technology to assist in those audit environments. So tax reform is number one. And then I think number two, businesses are really looking for certainty. So obviously in the environment that we are currently in, a lot of change is happening, but they need their governments and the government programs to remain stable so that they can rely on them again to make those business decisions. So what we saw in this budget was actually that. So full focus on both numbers one and two. And so if our number two, we're seeing those extensions of credits, we're not seeing things change. We're seeing expanding of programs, we're not seeing them eliminated. So it's given the 23 and the 24 fall economic statements a little bit more weight because now those are effectively in our 25 budget. So helping businesses to say and understand that, yes, you, the government, said you were going to support me in these types of acquisitions. And now here ratifying those 23 and 24 fall economic statements is great to see on that front.
And of course, one way to instill confidence is to say you're going to get the money back this tax year. Hopefully that gets dollars flowing fast. We need that in the economy. There is still, of course, this overhang of the trade uncertainty, and businesses have felt it. And for a lot of them, and this goes back some time now, they've really waited before they'll invest to see what's going to happen. Do we still have that challenge? We don't have a new trade deal yet.
Yeah, and for businesses that are in that scenario, so my advice, and I think what our firm is suggesting as a whole, is really we need to do more together. So what we mean by that is collaboration and actually implementing some of these projects. Again, the government is here to support at both federal and provincial levels. And as we've also heard, a massive federal opportunity with the new super deduction. So that is specifically geared towards manufacturers and processors to invest in physical capital equipment and building. So really trying to move the needle on making these projects into the ground and actually turning on that equipment and getting it productive for our country.
So good to have you, Martha. Appreciate your time.
Thanks for having me.
Martha Breithout is a partner in credit and incentives at BDO. Coming up, does the budget build in generational inequity? That's still ahead. But first, fast fashion retailer Shein certainly made some noise in its brick and mortar debut in Paris. In partnership with department store BHV, Shein was met with protesters and also long lines of shoppers eager for bargains. The unlikely pairing in the capital of haute couture was even further complicated by a scandal involving sex dolls sold on Shein's site. The dolls have been removed, but the controversy may be the hottest thing about this fashion brand. We're back after this.